All right, we're live. Welcome everyone to the Tetrault Show. Thanks for joining me today, Thursday, April 23rd, 2020. Thankful that you guys came in. I'm Rob Tetrault from robtetrault.com, portfolio manager here at Canaccord Genuity Wealth Management and the Tetrault Wealth Advisory Group. Before we get into our guests, we actually got two special guests for you today. First is Adam Buss. We're going to talk about some changes to the insurance world. And the second is none other than my father, Claude Tetrault. But before we bring in our guests, quick message here from our compliance department. Thank you, Producer Mox, for setting that up. All right, let's get right into it. First guest, Adam Buss. We're going to talk for a few minutes here with Adam Buss. Adam is wealth head of wealth and estate planning strategist, senior wealth. How does it go again, Adam?
Wealth and estate planning specialist, Rob. You'll get it one of these days. Don't worry.
I know, I'm terrible. Welcome, Adam. Wealth and estate planning specialist from Canaccord Genuity Wealth and Estate Planning. Thank you for joining us, Adam. You've already been a guest on the Tetrault Show. We're happy to have you here today. How are you doing?
I'm great. How are you, Rob? It's great to be back again. I appreciate the opportunity to come back a second time.
Yes, I wanted to bring you in. So our main guest today, you're the kind of the opener. And then our headliner is my father later today. But I did want to bring you in because there's been there's been a lot of talk lately about changes in insurance and movement. How has your time been right now? You look like you're working from home. Obviously, I know that, but you could tell our viewers that, obviously.
Yes, I've been working from home for the last month now, promoting social distancing, keeping the staff, clients safe. I've been super busy. Lots of client connections, chatting about planning. Giving people the peace of mind, knowing that their financial plans, their goals and objectives are on track. I mean, at the end of the day, markets move up and down, but we want to make sure that a client's long-term goals and all their other needs are looked after and still on track, regardless of what's happening in the market today.
Good. So, what's been keeping you busy these days? Like, give me some of the stuff you're working on.
So last week, I actually had a unique opportunity. I got to be a judge on a scholarship contest. Now, this is a contest put forward by one of the insurance companies for anybody who had a family member pass away without having adequate life insurance in place. So it was an extremely neat opportunity, very humbling, very, very interesting stories, very sad stories about, kids having to work extra jobs to make sure that they're okay financially, make sure that their mom or their father is okay, having to put their education dreams on hold because their family doesn't have the financial ability anymore to make sure they're okay. So certainly,
that's fantastic. Sorry, Adam.
No, that's all right. So it shows, the impact that having enough life insurance in your family or enough critical illness insurance has to make sure that, their surviving family is okay financially, that they can stay in the family home, that they can pay off debt, that their kids can continue to be on track with their education goals. Not put the extra financial burden and stress on the family so that they can take the time that they need to grieve. There's no amount of money that can be put in place to replace that family member, but hopefully it helps make it less burdensome for the family going forward from a financial standpoint.
Those are great points. Hey, Adam, I heard also that they've adjusted or laxed some rules with respect to insurability or medicals required. Am I wrong on that? What's the latest on that?
No, you are absolutely correct. I mean, due to COVID-19, none of the nursing companies are going out and completing any medicals at the moment. So they're not coming to your house to do, the blood vitals, all of those exciting things, which a lot of people don't necessarily look forward to when it involves an insurance application. So many insurance companies out there have kind of relaxed their application process to make sure that we can get more people insured today. It's a topic that's top of mind for most people. So now we can do a lot of insurance application as what's called a non-medical, which means we just ask the medical questionnaire without having to go through the whole extra steps of sending a nurse out and going through that whole process. Um, it's a great opportunity for people who are sitting on the sidelines waiting to get some coverage in place. Now's a great chance to get some fantastic coverage with potentially less hoops that you have to jump through to get it.
Now, are they doing the actual underwriting, or is it just they're saying we'll give you insurance for now, but we'll decide if you're covered later? Are you actually underwritten and insured at the time?
That's a great question, Rob. And yes, you are underwritten at that point in time based on the medical questionnaire that you are answering. So yes, it is not, well, we'll come back to you in a couple months and reevaluate. It is policy in your hand, and now the insurance is in place.
Wow, I imagine they're not doing this for $10 million policies or 20. This would be, I imagine there's a kind of a ceiling where this works.
Yes, there's certainly a ceiling. Different ceilings apply based on ages. So some companies are up to $2 million of life insurance coverage. Again, depends what age. Most options are available under the age of 60 as non-smokers. That's super great coverage for whether it's whole life or term life insurance without having to jump through a lot of those extra steps.
Yeah, that's really neat, because I mean, what can you do right now? This is kind of the theme of COVID 2020 is, life's given us lemon. We are going to make lemonades with everything. And I really like how the insurance companies have kind of figured this out, and now they're giving people the opportunity, provided you're honest in your questionnaire, provided you disclose your medical conditions, we will insure you up to this amount on good faith. And I guess they have enough stats and enough data that they can actually do that. And good for them. And it's a need right now for people, right?
Yeah, whether it's life insurance, whether that's whole life, term life, critical illness,
disability and critical,
disability included as well. So all of that has different limits, but there are certainly some great options available. I've had a lot of clients reach out that have had the time now as well, due to either working from home or changes in work environment, that they actually have some free time to reevaluate their insurance needs. So certainly a great time to use your free time and get a lot of these things looked after. And I know you're probably going to ask this, but I'll beat you to it. Most of this process, if not the entire process, we can do long distance. We can do it virtually. We can complete the entire insurance application from the client being in the comfort of their own home, which is great.
Yeah, business has changed, right? I've been doing a ton of business remotely now, and it's new. I think it's exciting. It's just we got to be adaptive. We got to stay on our toes, and it's really neat. It keeps us sharp, right, Adam?
It absolutely keeps us sharp, and I love how our team and Canaccord Genuity has adapted extremely quickly to this new environment that we're working within, and we're able to handle all the clients' requests with ease and make sure that nothing gets missed.
Now, I had a question from a client who was worried about, one of the things I noticed, Adam, with individuals, whether they're clients or not, is that it's very easy to get caught in the moment. It's very easy to think, oh my God, I look at my statement today, and today this is happening. This, my retirement's in 8 years, or my retirement already happened, or, I'm expected to live till 91. Oh my God, this is going to dramatically impact my life. My life is over. My portfolio is down a little bit. What are your thoughts with respect to that? And how does planning play an important role in trying to alleviate some of that stress for individuals?
No, that's certainly a great question, and when we go through the planning process with clients, we generally use extremely conservative assumptions in regards to a rate of return, inflation rate, longevity, making sure that they don't outlive their financial resources. It often depends how much of their resources are coming from a company pension or government pensions, how much is being reliant on their savings. Do they actually need all of their resources? So a lot of different variables that we do want to try to plan for to make sure that the client has, the peace of mind moving forward. We could even base their plan off their potential current market value if their investments are down. So again, we're using the worst case number to kind of project it going forward.
And what we've seen, you and I, we've done a bunch of these, kind of re-looked at plans for clients together. And the majority of the people that we deal with, everyone that we deal with, there's been actually no or little to no or absolutely no impact to their actual lifestyle in retirement, to their actual day-to-day living, to what they can and can't do, with their estate. We've seen that through good planning, you kind of avoid this stress. And in theory, the people that are stressing, most of them, all of them, pretty much that we've seen, shouldn't be, right? With respect to planning.
That is, if they have a plan in place, that certainly helps with, making sure that, they have the roadmap to move forward, to make sure that, they have the peace of mind for their retirement goals or their financial future. I mean, yes, maybe they are stressing if they don't have a financial plan, if they're not sitting down with somebody like yourself or myself to make sure that, they are entirely on track.
Hey, I want to ask you about the latest in the offering to students from the government. You and I talked a bit about some of the CERB benefits in the past. That's $2,000 now to anyone who's kind of been laid off or isn't working, and you can now make up to $1,000 per month, kind of part-time, and still qualify for the CERB benefit. So that can be up to $3,000 a month now of income. This latest one, our Prime Minister offers $9 billion to students facing joblessness over pandemic. What are your thoughts there? I know it's brand new. Did you get a chance to read up a little bit on that?
I had a brief look at it when the press release came out. And I believe instead of the $2,000 a month for the CERB benefit, students can qualify for $1,250 a month for a 4-month time period, for 4 months over the summer, to replace that income that they might not have the opportunity for, a part-time job during the summer anymore. I believe the $1,250 can go up to $1,750 if the student has a disability or been affected in some way by COVID. I'd have to double check the source on that one.
Or if they have, I'm just reading on National Post here, or if they have a dependent at home.
Correct. Yeah.
So if you're a student and you have a dependent, you can get a little bit more. You can get $1,750. So another program that we're seeing here by the government to kind of ease the pain for our consumers. I believe when you were first on my show, Adam, we had talked about the potential for the government to kind of print money. And by the way, guys, we're coming up with Claude, our guest, in just a few minutes. I just want to get through a couple of these topics with Adam, and then we will bring in our guest, Claude Tetrault, to talk about his history in the markets and investing. He's got some good stories. So we're now up to about 12% of GDP spending in Canada towards these programs. So we talked at first about CERB. That was a big chunk. We talked at first about wage subsidies to the businesses. We've also had the federal government go out and buy actual bonds and buy short-term debt obligations. So now we're up to about 12%, which is dramatically more than it was in 2008. Still some room, I would say, and I think you would agree, if we need to. There's still a bit of powder in the Canadian coffers, the Canadian government coffers, but we're a lot higher now. We're spending, I believe they announced also today, $1 billion in research towards pandemic-related, COVID-related vaccines and research. Hey, by the way, on that point, those of you who want to ask questions to an infectious disease expert, I've been talking to you guys about my guest. She will be on the show on Monday, Dr. Karen Fowler. She is an infectious disease specialist, a PhD of infectious diseases. She works directly in this, University of Alabama in Birmingham. She is one of America's leading minds on this. I'm thrilled. I got to know her through different dealings in the past, through some of the charitable work I'm doing. Really, really thrilled to have her on. She will be on Monday. She can answer all your questions about vaccines and virology and morphing of these vaccines and the different strains and immunology. And so if you're interested in that, join us Monday, Dr. Karen Fowler. Adam,
sounds like an exciting guest on Monday, Rob.
Yeah, I'm excited. You're also exciting, Adam, and my dad's also exciting, and my sister, and all the guests we have here are exciting. But I am excited to get Dr. Karen Fowler on the show. Well, first of all, she's got a fantastic personality. She's funny and she's witty and she's clever and she's incredibly bright. And this is what she does for a living. So I'm thrilled to have her on the show.
So Rob, you're talking about all the government spending. You know, what's going to happen with inflation long term? Do you think with all the extra spending that's happening?
Yeah. So inflation is always fewer dollars chasing more dollars, right? So if we were to print $10 trillion tomorrow in Canada and just print $100 bills, and we were just to drop them from an airplane, and everyone had $10 trillion, well, prices would go up, right? Because people would be able to spend, you'd have more dollars chasing fewer dollars, and that would be kind of lead eventually to inflation. So inflation is the price of the goods that you and I pay for goods and services increasing year over year. So I think that the long answer is yes, but the short answer, Adam, is we can't have inflation right now, because inflation usually is led by, it's usually pressure on salaries, where salaries need to go up. We're not going to see that right now, because there's going to be unemployment. There's going to be a significant level of unemployment. So we're not going to see that right now. I think that inflation is not, and we have different experts that we can bring on the show to chat about this. I don't think we're going to see an immediate inflation problem. Clearly, I'd be silly if I said that printing money and throwing money at this problem is never going to be an issue, but I don't anticipate it to be an issue short term, just because of the serious level of inflation that we have right now, of unemployment that we're going to have. And there's going to be deflationary pressures on many things. So right now we're at about 2% inflation and have been for the last 10 years or so. I don't anticipate us to get to the 3 or 4% number anytime soon, Adam. When you're doing your plans, what do you use? When you're doing your plan, you use 2%, correct?
I use 2.5%. So I mean that's slightly higher than what it has been lately for the Canadian inflation rate, and it's slightly above what Financial Planning Canada puts forward as the recommendation to use. So I'm slightly more on the conservative side.
Good for you. I like that when you and I are doing plans, and I say you and I, you do most of the work for this, but I like that when we're doing plans for clients, we're extremely conservative with the rate of return. We're extremely conservative with inflation. We're extremely conservative with how long we project their life expectancy. And we're extremely conservative. Like, we typically don't force a client to sell a home or anything like that to pay for their lifestyle. And we still get, really good results from that. And times like this, when the market's down a bunch, it reminds you why you do your job and why you project like that, right? So good on you for doing that. Good planning, good work for the clients as well. I think I want to maybe end that there, Adam. I want to thank you for your time today. I will bring you on the show again. Just a friendly reminder, if you're a client and you're worried a little bit about any of this planning or anything in the background, feel free to reach out to us. We're here for you. We're happy to review the plan. So Adam and I are both happy to do that for you. Adam, thanks so much for tuning in today. Thanks for talking about the incredible insurance opportunity. No medicals for certain people, depending on your age and how much, or I should say, different types of medical exams and different type of underwriting. So it's an incredible opportunity. Thank you, Adam, for your time today.
Thanks, Rob.
See you in the office. No, that's a joke. I won't be seeing him in the office. All right. My next guest, I want to take a second to introduce him. Mox, do we need to run the disclaimer again? No, we're good for that, right? Again, so I'm Rob Tetrault from robtetrault.com, head of the Tetrault Wealth Advisory Group. Portfolio manager here at Canaccord Genuity and head of the Tetrault Wealth Advisory Group. Pretty thrilled to have this next guest on. None other than my father, Claude Tetrault. Claude, can you hear me?
Yes, I can. Hi, everybody.
All right, thanks for joining us, Claude. So, bit of a crazy week this week and crazy times in the market. I guess you're working from home as well?
Yes, I am.
Got some individuals saying hi out here for us. So what's your take first of all on what happened on Monday in the oil market? I know you've kind of followed the oil market closely your entire career. What happened on Monday? Take us through it.
Yeah, it was pretty ugly. It's one of those rare things. It's what it's called a long squeeze, and I had actually never seen it before. I'd seen a lot of short squeezes, but let me explain. So what happens in the futures, like when you go and buy something, you just pay the price and that's what it is, whatever it's being offered. But there's the futures market, there's contracts out there. And that's how companies in the commodities areas operate, is that it facilitates companies doing business. So in the case of oil, there's refineries that need oil all the time. Every day they're refining oil, they're selling it. And so rather than pay the ups and downs of the market, when they go in the futures markets, and when the price is good, they will actually buy a month or 2 or 3 months worth of supply and lock in their price. And then at the same time, they will hedge, and then they will sell their gasoline at that price to service stations and that. So it removes the volatility of their earnings of their business. So it's done all the time. Now, the sellers of these contracts are the oil producing companies that they're producing. For example, a company produces 1 million barrels of oil every month, so they know that it's going in the pipeline, they're going to sell it. So rather than buy and sell at different times, whenever this price is a price that they can make an economic profit, they go ahead and sell and buy those, sell those contracts. So fast forward, in normal times, the price are on the settlement day. There's a settlement day, by the way, 1 day a month, where the buyer and the seller exchange the oil and exchange the commodity that they're buying and selling.
And
so that happened on.
And just to clarify,
all those yes.
Just to clarify for our viewers, so 1 day a month, they're actually, so this is mostly speculating, but at the end of the day, someone actually has to receive physical delivery of a barrel of oil, and that is taken into account on the contract delivery date. And the end of the contracts was this Tuesday, which you were talking about.
That's correct. So when the refinery bought the oil 6 months ago or a year ago, thinking it was a good price at $25 or $30 or whatever it was, and they would need that oil in order to refine it to sell to service stations and gasoline outlets. What happened? COVID-19 came in February, and then the airplanes stopped flying, the cars started driving. So the world demand, and even here in Winnipeg or anywhere in the world, dropped by anywhere 40 to 60%. So those refineries that kept taking this oil, they had contracted to buy this oil, they got nowhere to put it. So they could not physically take the oil, and oil is different than other commodities like milk or corn or wheat or that. You can always throw it on the ground, or put it in a shed somewhere, or just throw it away. Okay. Whereas oil, you cannot throw away oil because of the pollution and all that kind of stuff. So these refineries, and I'm using refineries, there were speculators also, buyers, but to put into context, these refineries could not physically, they had to take that oil, and there was no storage. So so in order to get rid of their contract, they said to somebody else in the market, we'll pay you to take our oil because we have no place to put it. So that's why the price went in 1 day from $20 a barrel to minus 39. In other words, at the end of the day, I use refineries, it could be speculators, it could be anybody. Refineries are actually paying somebody else, take this oil and I'll give you $40. Okay, and now they've got 30 days of breathing room, because the next contract that expires is the June contract, which expires on May 15th. It's complicated, but that's how it is. So on May 15th, if you go to the exchange, you'll see that there's thousands of contracts outstanding. So these contracts will have to be fulfilled on May 15th. And who knows, May 15th, maybe the economy will open and maybe oil will be at $100 and there'll be no problem. But the reason it's a long squeeze instead of a short squeeze is that it's the people, normally it's the people that sell that don't have, I'll talk about that in a second, but it's the sellers are the sellers are okay because they delivered, they had lots of product. We have an oversupply, but it's the users here that were squeezed. They had no place to put it, and hence I had never seen that in my life. I don't think it's ever happened again, that any commodity, whether it's a farm commodity, it's a base metal, that would ever go from plus $20 to minus $39. And you know what? We'll probably never see it again in our lifetime.
Well, first of all, Claude, I don't think it could happen in many other commodities, because if milk were to just go negative, or pork bellies were to just go negative, you would just throw them, you would dump it on the side of the road, or you know, there'd be a small cost to dump milk, but it'd be effectively zero cost.
Exactly.
So it can't go negative. You can't have
it would stop at zero.
Yeah. But the very interesting part
at zero.
Yeah, the interesting part on the squeeze is that I had this, let's say I'm a speculator. So I think, oh, I'm gonna speculate on the price of oil, and I'm just trading it, and I have actually no intention of ever getting a barrel of oil. Like, I have no interest in getting a barrel of oil. I just want to gamble. I just want to gamble and trade and speculate. Those people who held that contract on Monday when the markets were closing, and if you held that, you had to accept a barrel of oil, were freaking out. They were caught in your long squeeze, and they're like, I can't accept a barrel of oil. I have nowhere to put it. So as a result, minus $37 for a barrel, 37, $39 for a barrel of oil. Crazy, crazy times, Claude. And we'll talk a bit about the short squeeze in a sec. I just want to review some headlines real quick with you here today. We talked about the U.S. weekly jobs claims. As a reminder, today is April 23rd, 2020. My mom told me I should be doing journaling, so this is part of our journaling effort, Claude, because someday we're going to watch these videos and we're going to think, could you imagine there was minus $37 barrel of oil? This video is proof that it happened. I took a picture. I actually took a picture on my screen, and I can't believe that we had minus $37 oil for one very, very brief period. So the weekly jobless claims in the U.S., they were 4.4 million. So we're now at about 26 million jobs that have been wiped out in the U.S. I don't think that would surprise you in any way. Any comments on that?
No, I pay less. I mean, it's sad and it's a terrible thing, but it's because of these times when I pay less attention to the meaning of it.
Right, because we know that there's a lot of people that are losing jobs, whether it's 25 million or 30 or 20. We know it's a lot in the U.S., and we also anticipate or know that a portion of them are going to come back to work at some point here, and we don't know when that is. But you're right; it's no huge use dwelling over the number.
Yeah.
Hey, I want to ask you about some of the other headlines here, specifically in Canada. Just the housing. There's the headline on the BNN talks about Toronto housing sales sink 69%. Now that is the number of house listings. Number of house listings have dropped 69%. Do you have a take on that? We probably have the same opinion on that, but I'll let you say it.
Yeah, I mean, if you don't have to sell your house, it means nothing, because it's just there's real estate. Nobody's viewing the houses or anything, so it's just less houses are selling. However, because there is a lack of buyers, okay, because people are not buying, should you fall behind, lose your job, and decide you want to sell your house and downsize to a smaller house because of your personal financial situation, but then if you have to sell, you're probably going to take, or you're going to get less for your house than you thought it would in these markets.
Yeah, I would agree. Hey, some other headlines, Claude. I noticed that in Manitoba here, the Saint Lob 200, they canceled their event coming up in July. The Calgary Stampede is going to announce in an hour, I believe, that they are canceling the Calgary Stampede for the first time in 100 years. We're now seeing, a whole bunch of cancellations for events. Marchand Logging Days, Saint Jean Baptiste, the St. Pierre Frog Follies. What's your take on all these events being canceled? And do you think they have a serious impact on GDP, or is it? I mean, it definitely is a serious impact, but what's your take on that?
Well, all of these things affect our GDP, right? Because people are not spending, and the money's not coming in, so they're not giving to charities. So absolutely all of those things will have an impact on our GDP and our GNP.
I want to talk to you about the noise that is BNN, that is CNBC, that is the talking heads on TV. What's your opinion about it generally? I know you and I watch a lot of BNN, and you and I watch a lot of CNBC. What's your opinion on it generally? And what advice you have for the viewers out there on that?
Okay, so when you're listening to these stations, they're entertainment stations first, right? And they provide both facts and opinions. So you have to be able to distinguish between what is a fact and what is an opinion. And the opinion is what I call noise. When it gets on and says the following, yesterday the price of oil was down $25, and therefore I think you should buy. Well, the first part of it was that the oil was down $25 is a fact, but whether you should buy it or not is simply that person's opinion out of thousands and thousands of people. So what I like to say is that the stock market of the day, the short term at that particular moment, is a perfect measurement of the equilibrium between the people who have opinions on buying and the people who have opinions on selling, and not necessarily the value of those shares at that particular moment.
Yeah, because long term, generally, stocks will trade and have traded on a multiple of profit or on a multiple of cash flow or on a multiple that's measurable. But short term, what you're saying is this right now when the markets are, you can't really measure profit, you can't really measure earnings because it's so out of whack that now what we're seeing on BNN is noise, because every single minute you and I could play this game actually, Claude, where I go on BNN 1 minute and I say that this stock is a raging buy, and then you go on the next minute and say that this stock is a raging sell, and we would have fun doing that. But we could do that, and that's what they do. They're providing entertainment, right?
Yeah.
Hey, I want to ask you.
That's exactly what it is, because I can make. I was just going to say that, yeah, you name me a stock, and theoretically, I can make a case, or I could also make a case itself, depending on what metrics I use.
I think it's incredibly important for our viewers and our clients to remember that if you and I were running BNN, Claude, we'd be pretty good at it because we'd have extreme opinions on each side or whatever, and you could effectively kind of carve the opinion, and it is entertainment. Now, for us, for people like you and me that actually gather some of the data, and we gather very little data from these actual TV shows that we actually use in our day-to-day jobs. But for us, we do watch it as well. I want to ask you about, you talked about a long squeeze. So a long squeeze, you mentioned, is when someone holds something, they are long a commodity, and they get squeezed because they cannot accept delivery of that commodity. Do you mind kind of going through what a short squeeze, and maybe we should talk about what it is to trade on margin, and what you've seen, and maybe you could talk about a short squeeze after.
Okay. So for those who don't understand a margin account is simply like having a line of credit, as you may say. So if you open an account, for example, at all brokerage houses, and you put $1,000 in, most brokerage houses will let you borrow 50% of the value of stock. So let me give you an example. So today I put $1,000 in my account. I buy $2,000 of a stock. Therefore, I have my own $1,000, and I borrowed $1,000 from Canaccord. Therefore, I have $2,000 worth of shares. Now, if tomorrow morning, I'll use extreme examples to make my point. If tomorrow morning the markets go up 50, well, now I have $2,000, so I've made 50% or $1,000, and since I had only put in 1,000, I've doubled my money. So because I'm 50% margin, the profits are double. Conversely, if I do the same example, I buy $2,000 of stocks and the stock market drops down 50%. Okay, the next day, well, I lose 50% of my $2,000, but I still have a loan of 1,000, so I pay back the loan, and I've lost 100% of my money. So the moral of the story is leverage is a double-edged sword. So whatever happens to your portfolio, you make twice as lose twice as much. So it's not for everybody, and be careful if you use it. You should know what you're doing.
Yeah, and we're extremely careful with margin, but I do think there are some really good stories, Claude, and one I've heard you tell before is a good one. I believe you had a colleague or something who was trading heavily on margin. Now, I want to go back to 1987, if we can. 1987, the last kind of big crash that we saw like this, 23% in one day. Claude, you were trading that day. Can you take us through what was it, October 19th, 1987?
Yeah, October 1987. It had been a tough weekend. It wasn't like today where, you just click on your phone and you see the world news, the futures and all of that. There was internet, but it was different. But the markets had been down about 10 to 15% quietly in the week before. And it was an uneasy feeling because a 10% correction, it hurts the portfolios, especially that if we have margin. So going on Sunday night, going to bed and coming on Monday, I never expected that, but it was an uneasy feeling. The bells rang at 8:30 a.m. in Winnipeg here, and it was a complete disaster. And right first minute, it was down. It kept accelerating, and there was no end to it. And we had never seen. I've been in the business about 15 years, I guess, and I had never ever seen that. And unless you had been born and you've been around 1929, nobody had ever seen that. And people were wiped out, and people's portfolios were down 22%, and those on margin at full 44% of their portfolio in one day. So an example, and one of the stories I tell, is that I had a big trader in those days, and he was margin is great when you're right, make tons of money, and they're a real shrewd guy, and he was always running at full margin and making lots of money. So obviously that day was wasn't a pleasant day. So anyways, the way the margin rules work though is that when you're on the margin, you've got a loan and you're lacking security now because you had lost 44%, you have to replenish that amount of money in this account, or else the brokerage house, at the time I was working for a bank, doesn't matter, they would have sold out his positions. And obviously, if you have a portfolio of blue chip bank stocks that are down 22%, you don't want to sell it the next day. So they said, well, we need a check. At that time, which was a huge amount, it'd be $3 million today. It was about $500,000 in those days. And they said, we need the money before they open tomorrow, or else we sell out. So call the client. You live 4.5 hours away, where there was no airports. So got a car. He said, I'll come and pick up the check, and got in my car, 4.5 hours there, 4 hours back. I had the check before 8:30. And it's the best movie ever made.
I love that story. It's not. I'm not trying to make light of margin trading. It was definitely a different era. Nowadays,
Yeah.
Yeah. And the thing with margin is that people might wonder why is you agree that if you trade on margin, that they can call your loan based on the rules of margin. So if you can't make the payment, they sell you out, and too bad. That's the rules, right? So if you don't like the rules, don't trade on margin, right? So you don't have to trade on margin. But this guy obviously liked trading on margin and came that close to getting wiped out. But some people definitely did get wiped out.
Yeah.
I want to talk very briefly about
absolutely. And times were different.
Yeah, times were different at the time is what I was going to say, Claude. Times were different at the time because it wasn't 24/7 phone. It wasn't, market cycles. Like, take me through a market cycle back then, how long it took, the information cycle. You would read it, you'd see it on your ticker. Very few firms had computers, or if they did, it wasn't super efficient. And people would see the 6 o'clock news, and the 6 o'clock news would then cause more selling the next day. You'd see the 6 o'clock news, you'd call your broker, sell my portfolio, cause more selling the next day, 6 o'clock news, sell my portfolio. And eventually you get this kind of collapse of the market. They used to take, 4 or 5 years, these cycles, and now they take dramatically less. Take me through what you've noticed, the change in the industry on that.
Yeah. Well, you're right. When I started in the investment industry in 1974, there was no computers like today. There was no laptops. There were no desktops. So you basically had there was the tickers from the exchange that only the brokerage houses had. So you could never check your prices at home or anything. So that was one thing. The information was in there. When I went to school and they trained us to be stockbrokers in those days, is they always said, economics 101 is that economic cycles are 4 years, 4 to 5 years. So you're going to be up 2.5 years to 3 years, and then it's going to correct for a year and a half during a recession, and then it's a nice hill, like a nice curve, a little bit like coronavirus curve, up and then down, and it was a fact. If you look from 1965 all the way to 1990, basically cycles were pretty close to 4 years, and pretty well the same, up 2-3 years and then down 1 year, and then fast forward to what I call 2000, even last year, December 18. I mean, the market's corrected in 3 months. What normally would have taken a year and a half, and then like 6 months later, we were at record highs, and all of this occurred within 9 months. So, and it's because of technology and a bunch of other stuff. Companies are reporting their earnings every day now. In the old days, the reason the cycles were longer is that there was the earnings every 6 months. You got a book in the mail, and it told you what the company's made, and therefore you could not react like in 1 month, because you didn't know what was happening for 6 months. So that's the biggest change there.
Okay. There's a bit of a lag at my end, so I apologize to the viewers if it's or maybe it's at your end, Claude, but it is really, really interesting how much our industry's changed and what's happened in that time. Specifically, one thing that's changed a lot, Claude, alternative investments. Now you've done a lot. I've not given you really much of an introduction here to our viewers. I probably should. You are a fellow of the Canadian Securities Institute. You've basically worked your entire life in the investment world. I know you were licensed as an advisor, I want to say in 1976. You worked as a bond trader. You worked you actually ran the book for a credit union. You ran their deposit and their loans for a credit union. You were president of that for a few years. You worked as an advisor. You worked as an investment banker, where you actually did mergers, acquisitions, IPOs. Some of the largest Manitoba companies that exist today were largely because you raised the capital and you structured the deals for them. I don't want you're going to be humble, so I'm going to take a sec here. You've also developed some real estate in your life. You basically built Marchand West, which is a community in Marchand where you had a vision for an area where people could live, on 2-acre lots in the country, but close enough to the city that it'd be kind of like living in the country. I want to ask you about your personal belief in investing in real estate and how, if anything, has changed specifically in the last 5 or 10 years with respect to alternative assets. I'm not sure if the guest can hear. I can't hear you here, Claude. Maybe you could try to go to a better reception area for your phone. I don't know. Maybe we want to, Mox. Maybe we'll take him out and try to bring him back in if we can improve his reception. I was kind of really, really excited about this episode, Claude, because Claude has so many stories. He's told one, the margin call story. There are so many other ones here that I was hoping to get to. We're trying to work on the technical difficulties right now. I'm going to just finish the point that Claude was making. All these stories. If we're not able to get to all of these stories, if we're not able to get to all of Claude's stories, I promise you guys I will bring him back. His stories are really, really good. I think of the .com era in 2000. I'll let him tell that story, but how he decided to stay away from Nortel. He completely stayed away from it. The National Energy Program, what happened in 1980, the interest rates in 81, 82. He's got stories on all of these. The cannabis bubble, he was long in my ear telling me that just be careful about bubbles, Rob. there's just so many stories here that I would love for him to tell, that we are going to bring him back if this is just a technical difficulty here today. The point that he was going to make with respect to alternative investments, I'll just make it briefly here. The point that my dad was going to make is he has been investing in alternative investments his entire life, through private real estate, through owning real estate, through developing real estate. He's a big believer in real estate. So for me, seeing that my whole life, that's kind of what I was raised. I was raised hearing my dad talk about, the benefits of real estate and how it's passive income and you don't worry about it. His expression is always, it's like watching grass grow. And at first I thought that was a silly expression, but I don't think it is. It's a fantastic expression. You don't look at it, next thing you know, you have a lawn, right? So, there's Claude. Looks like Mox brought him back in. I don't know, Claude, Claude, can you, I think I was just telling the part to the story about to our viewers about how you've always owned real estate. You've bought real estate. You used to tell me about real estate. Owning real estate was like watching grass grow. But back then, the only way that you could develop and own real estate, you had to go buy a block, like an apartment block, or you had to like buy a piece of real estate. You had to put a down payment. You had to close on the property. You had to hire a lawyer. You had to do your due diligence. And even like if we go 10 years ago or even 5 years ago, things were dramatically different as to how people could invest in real estate or alternatives. Anything, what are your thoughts on that?
Well, there's been tremendous changes of retail investors, because you're absolutely right, Rob. I've been doing it for 20 some years, and you had to meet people, and they were one-offs, and it's hard to do diligence unless you're in the business, and there was no products where the average investor could buy. So the only way you could do it, go buy duplexes or small apartment blocks, and you were taking a lot of risk, right? Because you were in one area and all of this. So what's changed now is there's these alternative funds of which we can now put clients into it. And what these funds are, it's a diversified portfolio of duplexes and apartment blocks or whatever you were doing, but way less risk for two reasons. The number one reason is that, first of all, you're diversified geographically. So instead of buying your little apartment block or duplex in St. Boniface here or Winnipeg, and if something happens in Winnipeg, you're in trouble. So now these funds, we can pick and choose funds that have, in the U.S., in Canada, Eastern Canada, Western Canada, Winnipeg, if you want. And the ease, all we do is your investment advisor, your portfolio manager, like Rob, can now just buy these things off a shelf. And the second point I wanted to make, why it's a lot easier and better for clients, is that we have done due diligence on that. So somebody's gone out and checked the foundation, checked that, the rule, checked that they have a reserve. So when you're buying a property yourself, you got to do all that yourself or hire an engineer, and who knows if there's a crack in the foundation. That's all done for you. It's managed for you. It's diversified. And you have choices if you prefer offerings or apartment blocks or residential houses. You've got a whole bunch of products that can suit your risk. So we've come a long way, and now these things are available for the average retail investor, and it's a great thing. And investors should take advantage of that.
Yeah, I've been preaching this for a very long time to my clients. We were kind of the first ones that I know that were adapting and adopting the opportunity to invest in real estate, not through publicly traded REITs. We like publicly traded REITs. Don't get me wrong, but you get the volatility of publicly traded REITs. Whereby in a private REIT, like for me, like you, Claude, when you were young, you went out and you bought a sixplex, and hope the guy pays their rent, and hope the roof doesn't fall apart, and get up on the weekend and go change the locks when they don't pay the rent and whatever. Now we could do that side by side with other people, 25 grand, 50 grand, 100 grand at a time. It's dramatically different. And pretty much every single one of our clients owns some of that. And turns out that, the market agreed with us, because, those have not lost their value in the last quarter, in the last few months, whereby private REITs are down, whatever, they're down 20, 30, 40%. Hey, Claude, the reception is not the greatest. So I'm going to ask you one last question. What the best piece of advice that you can give? I know that you've always been an extremely patient and extremely methodical in every decision you've ever made with respect to investments in your life. You always remove emotion from the process. You're incredibly good at that. It's probably the best thing I ever learned from you, is how to remove emotion. The stock market does not care what you paid for a stock. What would be the best kind of piece of advice you give to the listeners here before signing off today with respect to making investment decisions?
Well, I could talk for hours about that, but you need to be disciplined, and you need a process, right? Because especially nowadays, with all this information, you hear at 6 o'clock that the world is ending, and the next day you hear that the world is okay. All of a sudden, next week we're going to reopen, and you've got all these cross currents, and you hear about this company that they're doing well, but it doubled or tripled. So you need a process, okay, and you need to decide ahead of time tolerances and how much you want to risk, and what you're going to do. And then once you've defined your process, you need discipline and a process as to when to buy and when to sell. And that's easier said than done. And that's why I don't want to toot your horn or anything, but individuals, it's very difficult. We just, as individuals, we just don't know. So that's why we pay money managers, because they have a process. They have, they will do asset allocation. They will. You give them your plan, and they're going to put process in place for you. Otherwise, you're just flying all over, and it's not good. You need a process, and you need discipline, and that's what I'm going to leave you with.
Thank you, Claude. Yeah, the reception's a little weak today, so I apologize to the viewers for that, but I will make a promise. Claude's got a whole bunch more stories to tell, and I enjoy hearing them. So, Claude, we're going to bring you back on another day. So, Claude, thank you for your time today. Viewers, stick with me for a bit. Specifically, what I thought he would say is, the market doesn't care, and the market is incredibly humbling. The market humbles you. It's incredibly easy to make money when the markets are up, when the markets are rallying, when everything you buy goes up. In times like this, I thought Claude would say, and I've heard him say it before, the markets are incredibly humbling, and they are quick to humble us and to teach us a lesson. So one thing I'm really glad in my life is that I got to grow up with my dad. He's my dad, obviously. I got to learn at the kitchen table through my entire life, through my just learning the mistakes that he had done, that others had done. He didn't make many mistakes, but a few that his colleagues had done, that other people had done, and just how to avoid those in my practice. Make sure that the philosophy and the process that we have is rock solid, methodical, disciplined, with a predetermined process for legging in, for example, for buying in securities. And I was kind of hoping he'd tell some of the stories about some of the advisors that blew up clients. I mean, they're anonymous. It was back in the 80s or 70s or 90s, but it's some of those stories are really funny to hear. I will bring him back, folks, I promise. I want to talk here about the coming show. So on Monday, thank you guys for tuning in. I saw some questions here, and maybe I should address them. There was a question about leverage. There was a question about Canadian banks. We do think Canadian banks are going to recover. Hopefully you're not overweight Canadian banks. We do think Canadian banks are going to recover long term. I mean, there's no doubt the dividends are safe. The CEOs have said so. I'd be surprised if they wouldn't. Also had a question here about how much percentage would you need to squeeze a bank on a home equity loan to make it worthwhile to leverage 25% of the house? I think the question is, should you leverage your house in order to invest in the market? I don't know your situation, Bob, so I can't answer that. But that is definitely something that if you wanted to do, if you wanted to borrow from your home to invest, that's something that you should definitely, first of all, if you have a spouse, a wife or a husband, you should definitely talk to them about that, because that's a decision that's incredibly, because again, leverage comes from the French word levier, lever, and it's a two-way street, right? So you're moving up quite more, you're moving down quite more. So I would just be incredibly aware of what's happening with your wealth and with your, is that needed in your life right now? If you do have questions, if you're a viewer, please go to speaktorob.com, www.speaktorob.com. Monday on the show, we have really excited to have Dr. Karen Fowler, infectious disease expert, professor of epidemiology in the Division of Infectious Diseases at the University of Alabama. She is a bigwig, and she's working in infectious diseases right now in the U.S. She's on the front line. She is. I consider her a friend. She might consider me a colleague, but I'm super glad that she's going to be making time for us on the show on Monday, 3 p.m. Central Time. She's in Alabama, in Birmingham. I believe that is Central Time for her too. And then we're gonna consider to potentially bring back Claude next week for the show. Guys, please don't forget to subscribe to our YouTube channel, subscribe to our YouTube page. Thank you for tuning in today. I'm going to give you a reminder that I'm Rob Tetrault from robtetrault.com, portfolio manager at Canaccord Genuity Wealth Management and the Tetrault Wealth Advisory Group. Today on the show, we had my dad, Claude Tetrault. We also had Adam Buss. I'm thankful for both of them to have made the time. I'm thankful to all of you, the viewers. If you have comments, I'd love to hear them. Please send them my way, guys. Thanks for tuning in. Stay safe and have a fantastic weekend.